I'll start the meeting off then. Thank you.
Okay, please do.
First item today is appointment of chairman. Welcome to this meeting of the local pension board taking place on Microsoft Teams. This meeting is being webcast live to the public on YouTube. The first item of business is election of chairman. Can I ask for nominations, please?
I nominate Mrs. Page.
Thank you, Mr. Shepherd. Can I have a seconder, please?
Manjit Sroy. I nominate Councillor Page.
Thank you. Over to you then, Chair.
Thank you very much, everybody. And good morning to this pension board meeting. The second item on our agenda is the election of the vice chair. And I would like to nominate Mr. or Councillor rather, Manjit Saroya. Is it Mr. or Councillor?
I'm not a councillor, but thank you.
And Richard,
I second that.
Thank you.
Thank you.
So,
Thank
Manjit, you are duly elected now.
Thank you, everybody. Thank you.
Congratulations.
Thank
So,
you.
good morning, everybody. Let me just try to get my computer all sorted. And here we go. So, just give me 1 second to be right. It is playing up as always. Just a second and we are going to be there. Right. So before we move to the next item on the agenda, I would like to welcome Anthony as well as Ellie. How do you pronounce your name? Kelvin?
You pronounce it as you say it, Cut Kelvin.
Kelvin. So it is Ellie Kelvin and Anthony Cross who are our new members. So welcome. And we also hang on. It's gone again. I'm going to get sorted in a minute. Okay. Now, as you know, this meeting will be recorded, so we switch our cameras and microphones off unless we are speaking, and then we turn them back on. The third item on our agenda are the minutes held on the 18th of October, and I propose that the minutes of the previous meeting are taken as read. And I hope that is agreed by everyone.
Yes, agreed.
Yes, thank you very much. So, item 4 on our agenda, and that is question time. And I have not received any questions, so I'm moving on to item 5, which is any other items which are urgent. And there have been no urgent items received. And the item 7 on our agenda is on page 7 to 20. And that is the Pension Fund Administration Report, October to September.
Chair, could I just ask if members have any declarations, please?
Oh, sorry, I forgot that. Are there any members' declarations? But I don't suppose, other than being... Anthony, did you flash? No, it's flashing. No, no declaration, sorry. Right. And we are going over to item 7, which is the first report on the agenda. For Ellie, our Ian Howe, the pensions manager, will introduce the report. He will then go through the report. We always have a recommendation either to note or to inform. We make comments after the report has been introduced. So over to you, Ian.
Thank you, Chair. Good morning, all. And also to Andrew Stewart, Chair, who is joining us for the first time as the substitute employee rep. So welcome, Andrew, as well.
Sorry, I can't see Andrew. Where is Andrew? Can we see Andrew to welcome him? Hello, Andrew. apologies, didn't realise. Good morning. Sorry for interrupting,
morning.
Ian. Good
No
morning.
problem. No,
Welcome.
it's okay.
Carry
Uh,
on, Ian.
Thank you, Chair. So this is the standard report that I bring each quarter. This is for quarter October through to December. It's the position in terms of the administration for the quarter. I won't go through every single line. I will just pick out the key points as I usually do. I do want to start by talking about the key performance indicators, sections 4 onwards. The KPIs are shown on Appendix A within the report. As you'll see, there were 2 KPIs for business processes that were lower than target in the month. The death benefits sent to dependents within 10 days was 88%, which was slightly lower than the 90. And the retirement benefit notifications within 10 working days of being received was 83%. Target is 92. As those members who have been on the board for a while, you'll see that's the lowest it's been, and that is predominantly due to the McLeod legislation. Those members who have been here a while understand McLeod, and I've been giving you the information about McLeod. Stuart will talk about it later in his report, but this was the first quarter where McLeod went live, and as you can see, it has had an impact in the KPIs. There was unfortunately a system calculation bug in the initial McLeod delivery, and that did cause us delays in processing retirements during this quarter, and that has also been reflected in the customer service KPI. The customer service KPI fell to 89%, the target is 95. We've done an initial analysis of the feedback, and the dissatisfaction was delays in retirements and estimates, and these were because the benefits were taking longer. Because of the bug, we were having to manually work out the cases. We have had a subsequent change into the test system, does still require a manual work round, so the processes are taking longer. I do anticipate it will get quicker and it will get better, but it does reflect the situation in the quarter, and I wanted to make that point quite clear to you at the start. In terms of the numbers of the cases, they're on page 9 and 10. I don't propose to go through all of those line by line, but as you'll see, the figures remain fairly static in almost all of the areas. Preserved benefits and aggregations remain the highest, and they are still above the maximum targets that we are achieving or we aim to achieve. Workloads are still really significant, and because of McLeod, we have actually had to move 2 people to another to assist with McLeod, and we've also moved 2 other people over to another team to work on year end, which is also impacting, but I'll come on to that slightly later. But all in all, that said, I think the position remains pretty good. It's not quite where we want us to be, but the position stands pretty strongly. One other area that I just wanted to highlight, we've identified just over 1,059 new starters that were set up between June and December that already have a record on the system. So that might mean they were previously employed by another employer in the fund, or indeed the same employer, and we need to look at doing what we call an aggregation, so whereby a member can then combine their benefits back together. So I do expect the numbers of aggregations, whilst they're already high, they will increase further. Moving on to other areas, these are the areas that we include within the governance areas. So complaints, there were no new complaints IDRP stage 2 in the quarter, which is good. There was a update on one of the cases that's at the Ombudsman. This is a complaint where the member has against her former employer. That case, I expect, will continue. I don't have a predicted timeline for completion of that case. McLeod and dashboards, I won't say any more. Stuart will cover those later in his report. Year end, it only seems 5 minutes ago since I was talking about the last year end, and we're here again. So year end preparation, as per usual, we're going through the same process. The information has been prepared and sent to the employers, so they're aware. They're aware of the timelines. Timelines remain as previously, so all information will be submitted to us from the employers by the 30th of April. So all the timelines remain. The one point I wanted to highlight to you about this year end, which does give me concern in comparison to previous year ends, you may recall that the East Midlands Shared Service moved its payroll services for schools and academies to external payroll providers during 23-24. There were approximately 6,000 scheme members that were involved in those payroll moves. That has created a substantial amount of additional work for us in pensions this year, because what we have to effectively do is effectively reset those member records to now link back to the new payroll provider and effectively close the account with the county council payroll and then reset it and then relink it. It's a technical process that we have to follow, and we do this every time an employer moves. But normally, when an employer moves payroll, it's one employer, whereas this time we're dealing with 80 schools and 43 academies that moved. So it's a significant piece of work. This is why we've also moved 2 people from the team that deal with preserved benefits and aggregations to work on this, because we have to have this done, otherwise we won't get through year end. It does create a risk, but we have it in hand and we're working hard to resolve it. But it is an additional pressure on the section that we wouldn't normally have. There is a table on page 12 that shows the position and where we're at. As you can see, there were a number of payroll mismatches once you compare the information from the new payroll system to the old. There was just under 1,200 data mismatches that we're working through. We've resolved a lot of them. The remaining ones are in column on the right hand side. So you can see we're making strong progress, but this is all additional work that we wouldn't normally do. So just alerting you to that. I don't anticipate that it will mean that we can't get through year end, but it will mean that it's an additional pressure when we're already in a very busy section and we're dealing with the McLeod as well. So I just want to alert you to that. In terms of other areas, audit, there were 2 audits in the quarter. The pension creations, that's the audit to review the payments of new pensioners, including lump sums and death grants. I'm very pleased to say there were no accuracy issues with any of the scenarios, which is obviously really good and really pleasing. There was a recommendation that more formal written procedures outlining the monetary levels for checking and authorising were produced. I was completely happy with that recommendation. We have that, but we just hadn't got it formally documented, so accepted that, and we've done that. Calculation of pension contributions. Again, this is an annual audit. There were no material issues identified, but there were 2 recommendations. One was a quicker reconciliation between the payroll and Oracle Fusion, and any queries resolved quickly, and additional help in the investment colleagues to deal with this more promptly. Both of those have been actioned. Moving on, the code of practice, which has been stalled for months and months. You probably recall me talking about this many times. Well, finally, I can give you some positive news on this. On the 10th of January, the new code of practice was actually laid before Parliament. which was actually unexpected. After such a long delay, it suddenly appears, which was really good. Is expected to come into force in March. What we're doing is we're going to do a gap analysis work with the fund actuary Hymans, who will review all the previous codes, compare it to the new codes, identify whether there are any gaps or changes, and then we'll work through those. We will obviously bring that to the board and to committee as we work through those, but at least we have now a direction of positive travel. The employer risk, as you know, we monitor employer risk carefully. This is brought to the board every quarter. There are now 4 employers at the high level risk in terms of outstanding admission agreements. These become a greater concern at this time of the year because we are getting close to year end and we do need to get these completed in order for the records to be closed and reset up on the new employer with the agreement signed by all legal parties. We have chased these, and I actually have had a positive update from my colleagues on this morning. So all of the employers for the 4 highest are engaging with us, but we have given them the deadline of the 31st of March to get these completed, given the risk that sit alongside these. The members have been written to in all of these scenarios, so the members do know what the delays are, and it is just legally signing through the agreements. I wasn't going to dwell on the lower risk ones. They tend to be bonds, as you've seen before. There have been a number of completed cases. Section 50 on the report, you'll see that we've completed a lot in the quarter, which is all good news. So that work is continuing positively, and I'm pleased since we've had the new resource in place. This has really helped us significantly in this area, and the lady concerned really keeps a close eye on these. The other thing I've put in the report that I wouldn't normally have done is on the employer risk, just giving you an update on the 2 community admission bodies that we worked on, obviously for the benefit of newer members who haven't seen this previously. These are employers where there is an older, they're older employers without guarantor, so there's a higher risk to the fund. We're working on those to move those historic community admission bodies to pass-through arrangements, therefore security is then inbuilt. And the 2 that we worked on that were brought to the board, which was Val and Bradgate, you'll be pleased to know Val is completed. All legal admissions are now complete and everything is completely finalised. And with Bradgate, the draft admission agreement is circulated and the Bradgate lawyers have been reviewing the amendments. Don't anticipate any issues. It's been reviewed by county and city legal teams as well, and I very much hope that will be signed very shortly, so we'll be able to complete that as well. In terms of knowledge and understanding, we are going to try the new approach today in terms of board member training. We're going to go through module 3 of the Hymans training together collectively after the meeting today. It's a recommendation that board and committee members complete the online training because, as we all know, you do need to have completed the training to have the knowledge and understanding required to be on the board and committee. So I hope by doing this collectively, this will help alleviate some of the pressures that I know some of you feel with the training. So I really hope this new approach afterwards works, but I very much welcome your comments on that after the meeting itself. That's all I was going to say. I know that's a bit of a whiz tour, but obviously, Chair, very happy to take any questions.
Thank you very much, Ian. And as always, a very comprehensive report and a very detailed explanation. It is for us to note the report and to raise any concerns or ask any questions. And I see Manjit's hand going up. Before I go to Manjit, is that a typo under the purpose of the report? It states the second quarter. It should say third, surely, October to December.
which section is that on? Sorry, Chair.
On the purpose of the report in the second quarter period from October to September.
It's definitely the third period. Sorry.
Yes, so that's a
Apologies,
typo
that's
there.
a typo, yeah.
Okay, Manjit, over to you, please.
Thank you, Chair. Hi, Ian.
Hi, Manjit.
Really good report. Just think I was reflecting on the challenges you have in the last quarter and the fact you mentioned you've got resources allocated to the work you need to do. But do you think there's anything else that could come out of in the quarter that might prevent you achieving your KPI targets, especially customer service ones in particular?
As we move into quarter four, Manjit.
Yeah, quarter four. Sorry.
Yeah. The McLeod is still my concern, Manjit. That's my biggest concern. Whilst the system is not still doing exactly as we need, it is involving more manual work at the moment, Manjit. So I do still have concerns that the KPIs will not come back as strongly as ideally I'd like them to. They're definitely upward tracking, which is good, but I don't think we're going to be back to exactly where we need. My other concern is the pressure of the moves of the payrolls and the fact we've had to move additional resource from the team that deals with the sort of more day-to-day lever calculations to assist with that. But we've got to get through year end. That's obviously a statutory requirement with a statutory deadline for annual benefit statements. So it's really just tackling the highest pressure area first, Manjit. But the KPIs, to be honest, whilst they're heading in the right direction, I do think they still are going to be a month's lag, I think, Manjit, before we get back to where we need to be.
Do you think we need to consider any sort of additional, I don't know, resources to help you prevent that happening? Or do you think that's a sort of acceptable level of impact based on the priorities you have to address?
I think, Manjit, looking at the budget and the resource we already have, I think we are really in a position as best we can be. I don't want to keep pushing resource, if I'm honest, Manjit, because I know we are quite resource heavy. That said, we are going to have 2 apprentices start in 24-25, hopefully soon into 24-25, and that will help alleviate some of the pressures, because they'll be able to take on some of the more basic admin work, Manjit, which will allow other colleagues to move on to other areas. Mm-hmm. We also have temporary resource helping on McLeod already. Their contracts have been extended to March 25. Yeah. So the additional resource we already have is already helping us and has been extended, Manjit. So I think in terms of the resource side, I feel we are where we need to be. It's really more managing the risk and the expectations at the moment, Manjit, and dealing with the most pressing urgent work first.
Okay, that's fine.
Is that okay?
That's fine. I think you keep an eye on it and you'll alert us if you need any further support or there's some issues, generally speaking. Yeah,
that's very kind of you. Thank you, Manjit.
Okay, thank you. Thanks. Thank you, Chair.
Thank you. And Ruth, please.
Thank you, Chair. Morning, Ian.
Morning, Ruth.
It's just really on a similar theme around the retirement options, obviously, for colleagues that are retiring. And I think it was inevitable that there was always going to be a service dip with implementation of Remedy. And I don't think you're the only administrator that will have seen that. But for me, it's just about how are we sort of keeping members informed? If there is a delay, are your team, are there any emails going out? Is there any communication strategy around keeping members informed in terms of what's happening? Because I think part of that, the deterioration in satisfaction is because they may not be hearing anything. So that was just the question that I had.
That's a very fair question, Ruth. Probably not specifically in terms of a wider comms, no. We have done the McLeod comms to all, but not specifically for retirements as a group. What we are doing is we are contacting people when they leave to make them aware. So the comms are then included in the in the retirement information. So that's incorporated. But if they have specific delays that have been caused, we are just kind of dealing with it on a one-to-one basis, Ruth, rather than a sort of a more wider comms. It's difficult because some people aren't affected at all, Ruth. Some people are affected a little bit, and some people are affected a lot. So
yeah, sure.
It's
it was more that
difficult.
specific if there is somebody who's got, there's a complex case and that it's going to be delayed, that maybe the team, we email them just to
we try and talk to them, Ruth, in actual fact, in those scenarios, because we sometimes need further information from them as well. So it's kind of quicker sometimes to actually pick up the phone and talk to these people. Okay. But we are liaising with individuals that are affected as necessary. We probably will get swifter and more efficient at that once the systems are resolved as well, Ruth, because that will alleviate some of the time lag. But that's how we're kind of dealing with it at the moment.
Okay. No, that sounds good.
Is that okay?
That comes for those specific individuals. No, thank you.
Thanks, Ruth. Thank you.
I think that's quite nice, actually, because that is the personal touch, which I'm sure people, really would.
I think you've just gone onto mute, Councillor Page. Sorry, midway through that.
Yes. Okay. There are no other hands up on this item. Thank you, Ian. And that concludes item 7 on the agenda. And we are now going over to Kat to introduce the Net Zero Climate Strategy Progress Update on pages 21 to 28 on your agenda. That's another report to note. Over to you, Kat.
Thanks, Chair, and morning, everyone. So this is a high-level report setting out the latest climate risk management report of the fund and progress against the net zero climate strategy target. So the fund views climate change as a systematic risk where the climate actions or inactions of companies can positively or negatively affect other companies as well as the overall economy. To help manage this risk, the fund developed a net zero climate strategy, which targets net zero by 2050 with an ambition for sooner, alongside other interim, primary and secondary targets. The strategy aligns with the fund's investment belief sets out in the investment strategy statement that the fund must ensure the portfolio is not overexposed to specific risk factors, ensuring it remains well diversified across regions, technologies and sectors. The strategy and targets were developed following extensive engagements with scheme members, employers, the board and committee, the fund's investment advisors, and also best practice from the Institutional Investors Group for Climate Change. To help monitor the risks and opportunities of climate change, LGPS Central, on behalf of the fund, produced a climate risk report annually since 2020, and the latest iteration takes a snapshot at 31st of March 2023. The report sets out a number of metrics and ways to measure climate risk and opportunities in both backward and forward-looking ways. But on performance against the net zero climate strategy target specifically, the fund has performed very well in progressing forward within the fund's equity portfolio. So I'll just kind of bring out some of the key progress from the report. So the first interim primary target looks to achieve a 40% absolute carbon emissions reduction for the fund's equity portfolio by 2030. This measures the total amount of greenhouse gases which can be attributed to the fund's ownership of shares in a particular company. The fund is just shy of halfway there, so about 19.8% in achieving the target and reducing absolute emissions reductions. And this is despite an increase in assets under management over the same period, which could otherwise be expected to increase absolute carbon emissions given increased underlying assets. Ultimately, we're seeing positive progress within this target, and this is key in terms of supporting real-world emissions reductions. The second interim primary target is to achieve a 50% reduction in the fund's carbon intensity by 2030. This measure acts as a proxy for carbon risk. So if a global carbon price were to be introduced, it would be more detrimental to carbon intensive companies. This has also decreased, this one by 38%, and this is largely due to a decline in asset allocation of active managers in sectors such as energy and materials. And then we're also seeing our active managers choosing companies within these sectors that are more carbon efficient than the ones that they're selling out of. For both of these targets, we're also seeing these targets perform well against comparable reference market indexes, so performing well against the sector. For the secondary targets, the fund continues to reduce its exposure to companies with fossil fuel reserves, as well as increase its exposure to climate solutions year on year. We also have a target to increase our asset coverage, so that slightly increased this year, and for the report later this year, we should see kind of asset allocation, asset coverage increasing even more, as well as the data availability below that. Operationally, the County Council has committed to net zero by 2030, and we are also engaging with LGPS Central on their progress to set an operational target this year, which supports the strategy's targets. On the more forward-looking metrics from point 20 onwards, 81% of the fund's emissions are being engaged with, or at least aligning to the Paris Agreement target, and the fund will need to continue to monitor this alignment to ensure companies are taking real-world action and are progressing to further alignment and actually achieving net zero. The report also sets out actions taken by the fund to achieve net zero. So the fund's already invested over 1 billion in funds that tie in climate-friendly factors with positive financial performance. So we can see this investment in sustainable forestry, renewables, and a fund that favours investment in companies that are taking a proactive approach to environmental factors away from the worst emitters. I'll leave it there, but I can obviously drill into anything specifically members might want to talk about. There's obviously a lot about stewardship in there and the fund's actions.
Okay, thank you very much, Kat. I like the point 31 onwards, the next steps, because it sets out where you're going, you know, looking forward. And obviously, there is also the link to all of the background papers. But my question before I'm going over to members, it's actually very general. Under the next steps, are we also looking at circulating this report wider, or is it going on to our websites or to the Environment Committee? Because as you know, councils over the recent months have been putting out motions, you know, towards being, you know, investing in low carbon. And this is all, these are positive steps to very much saying we are working to being carbon neutral and we're doing our best. So what's your response to that before I go over to Manjit?
No, I think that's totally fair. I mean, one thing we're focusing on at the moment is trying to improve our communication to members, because the climate risk report that went in December, it's up to committee, and now obviously you're getting a snapshot of it. It's quite a lengthy and kind of hard to get into, so we're kind of trying to look at our communications, how we can improve that. We're hoping to do a newsletter to scheme members, so hopefully we'll get that done relatively soon, and that should kind of set out in really simple terms how well the fund is doing and next steps. And obviously we know we don't have all the answers right now, but we're progressing that. So sorry if I missed the first part of your question.
No, that's fine, that's fine. So that will be great to you know. Okay, Manjit.
Thank you, Chair. Hi, Kat. Really good report, thanks for that. My question, I guess, is in line with what the Councillor Page has asked as well, in terms of the information that's going to be made available. And I was just thinking in terms of when you said making it simple as possible, perhaps you know, there's some way of saying that as a red, amber, green status, to make it really simple, to say that, you know, we are on target as one sort of RAG status. And another one that's of interest to me, I guess, is our primary aim as a fund is to make sure we pay the pensions. And whether as a RAG status you can show, yes, because of making the investments in these green initiatives, our funding or our income is on target, you know, going forward, just a sort of forward-looking a sort of a report or a RAG status you can provide. What do you think of that? Is that something that you could think about, or is that something that's already planned?
Yeah, I think definitely the RAG status in terms of the targets we can do, showing, I think, the correlation between the funding is maybe harder, but the fund is, Bulesh will come in, but the fund is well funded, and so I don't think that, go on, Bulesh.
Yes, Bulesh wants to come in, so over to you, Bulesh.
Thank you, Chair. I was just going to add, you're right. We try to find balance here between funding level and our primary purpose, which is to pay pensions. We take our climate ambitions seriously, nonetheless. So, like you say, we've got to tread a fine line, and we're doing that alongside the triennial valuation, keeping an eye on our quarterly valuations of the total fund, which are reported to the pension committee also. But we're making good progress. So far, Kat mentioned, how far we've come along that weighted average carbon intensity reduction of 50%. So we've come a long way already. We can RAG status it. The public reports from the 1st of December will highlight how far we've come and the kind of trajectory. It becomes a bit harder to reach the end goals. We've done the easy pickings first, if you like, and it'll get progressively harder. But we feel confident, and we report to committee once a year, and then we'll bring a snapshot to board straight after.
Yeah, that's fine. That's really helpful. That would be helpful. I think something in a simple presentation form like a RAG state would be great. The other thing, I'm just looking at item 22. Is that just is there a typo at the end of that? It says, as well as looking at how the fund can consider. Is there some other words missing there on item 22 on page 25?
Yeah, apologies for that. It should basically say something along the lines of how we measure alignment going forward. So we have how we measure companies' portfolio aligning to net zero, but we'll need to improve those metrics as the understanding of net zero and companies achieving that progresses. But at the moment, there's a lot of issues about industry standards, so there's not really a standard of how we measure this. Yeah,
no, fair enough. That's really helpful. Thanks, Kat. Thanks, Chair. Thank you. Thank you, Bulesh, as well.
Yes, very informative, Kat. And as Bulesh said, it is a very fine line because after all, while we're all trying to be environmentally friendly, people need their pensions at the end of the day. I can see no other hands up, so therefore we note, and thank you very much, Kat. And that completes item number 8 on your agenda. And we're moving to page 29 to 52, which is the Pension Fund Business Plan and Budget 24-25. That report is introduced by our Assistant Director in Finance, Simone. Good morning, Simone, and over to you.
Good morning, and thank you. I'll just introduce the report briefly, and obviously then happy to take any questions. So this report presents the pension fund business plans for 24-25, both for administration and investments. It also includes the pension fund budget from 23-24 through to 26-27, and both of those are presented for review by the board prior to approval by the pension committee, which will be in March. So I'll just turn to the business plans first. So the administration element of the business plan is shown at Appendix A to the report, and key areas of focus really just briefly are continuing the implementation of the McCloud remedy, and you've already had an update on that from Ian in terms of the sort of resources that is taking. Also the implementation of the solution for the National Pensions Dashboard, and we think that will kind of increase in intensity really over the next 12 months and will be a huge project for the team. And also we will be reviewing the current provider for additional voluntary contributions for the fund as well. And the plan then just sets out the timescales that we're working to for those and the other actions that are included in the plan. You've then got at Appendix B the investment business plan. That covers 5 main areas or 5 main themes, which are training, policies, assets, fund valuation, and then reporting. And again, I'll just pick out a couple of key areas from that. First one, just to highlight, is the net zero strategy and continued work towards achieving the actions in the strategy, as Kat's already outlined really. We will also be updating the investment strategy to make sure it aligns with the strategic asset allocation strategy that was approved by committee a couple of weeks ago. And there's also some actions around the approach to training for members of the committee and board. And I know that's sort of interest particularly to members as well. And be interested to see how the approach goes later in terms of the training session. So that's the two business plans that are both included as appendices. Then from paragraph 7 onwards, you've got the pension fund budget. And just important to note here that the pension fund budget is independent of the council's budget and it is managed separately. So just to flag that for awareness. Key section really is table 8, and that does show the proposed budget starting with an updated forecast for 23-24 and then going through to 26-27. Also at the bottom of that table, you can see what percentage the budget is as well, a percentage of assets under management, and that is a sort of really key metric in terms of value for money that the fund is providing. And you can see from that metric that although the net budget is due to increase over the next 3 years, which you'd expect with inflation particularly, the actual percentage of the budget as a percentage of assets under management reduces, and that's because the assets under management are expected to increase over the next 3 years. You have then got through the following paragraphs further detail on each of the budget headings. I'm not going to go through all of those in detail. Obviously, I can pick up any questions, but I did just want to highlight a couple of issues in relation to the staffing budget. So in there, we have got some additional resources built in to deal with the McLeod remedy, and we've also built in 2 apprentices to start from, well, hopefully early in 24-25. We've also built in assumptions about the pay award on the staffing budget as well, and that's consistent with the county council's budget assumptions as well. What we've also included this time as well is some quite useful benchmarking at paragraph 31, and that shows that the Leicestershire Pension Fund compares favourably in terms of its admin costs comparative to other funds. So that's useful for the board just to note that in particular. And then, as I said, I wasn't going to go through all of the details of the budget in detail, but just to highlight that a recommendation, as with other reports, is for the board to note the budget and the business plans, and they will go through to committee in March. But I shall leave it there, but obviously happy to take any questions, and Bhulesh and Ian may also want to assist with any questions as well.
Thank you very much, Simone. And again, another very, very comprehensive report that doesn't leave us any room for any questioning because everything is there. I particularly like the benchmarking because one doesn't seem to realise the cost per head. So, but can I just ask before, I think Manjit and Anthony next, hang on, no, Anthony, sorry. But before I go to Anthony, may I just ask you a very, very stupid question? It's all set out, but under 10, it says the fund holds no reserves and has no capital expenditure planned. So say, this is just the worst case scenario. If anything goes terribly wrong with holding no reserves at all, how would that be covered? What would happen if there is any kind of expenditure, you know, hypothetical and the worst case scenario required?
But the budget sort of is based on quite prudent assumptions, and as we've said, in terms of things like needing additional resources for McLeod, because you know we look at what we think the risks for the pension fund administration and investments would be, and we do make an assessment for those risks and build that into the budget, and then of course we have got in terms of the investment side, we have built in what we expect the reasonable assumptions around management costs would be as well. So there are elements through the budget where we make an assessment of risk and build those in. But the pension fund it's not appropriate for the pension fund to retain reserves, and also it wouldn't have any need for capital expenditure.
Right. So, but what you're then saying that in the assumption, it's very much over budgeted all along to ensure that all eventualities are met.
I wouldn't say it's over budgeted. I'd say there's reasonable provision for the resources that the fund is going to need, and of course we also take into account the overall funding position when setting the budget as well.
Okay, thank you. Anthony, over to you.
Yes, thanks, Mrs. Page, and good morning, Simone. I just have one query, please, on paragraph 8 of your report. Very comprehensive, I should add. And it's with regard to the actuarial costs in 2025-26. Report shows those at 400,000 on the previous year and the following year. It's 150,000. I just wondered if you could explain, please, why such a high figure.
That is due to the valuation period. So the costs, the actuarial costs, rise at the point that we need to undertake the actuarial valuation. So that's why it's slightly bumpy in terms of that budget, because the costs would naturally rise during a valuation year, or at least leading up to the valuation year, because we do have to do further work and incur more costs as part of the valuation process.
Thank you.
Manjit, over to you.
Thank you, Chair. Anthony's question just raised something that was in my mind. Hi, Simone. Going forward with regards to the initiatives that the central government are asking funds to look at in terms of pooling and other things to reduce costs and etc. Do you think we'll get a view of what those cost reductions are going forward at some point in the near future?
Yeah, I think as government policy becomes clearer and as sort of the consultation process continues on pooling, we'll then look at the impact that will have on the funds management costs. At the moment, we've based this budget on our current level of pooling and current strategy. Yeah. But yes, as future government policy becomes clearer, we will then reflect any changes towards kind of further contributions towards pooling in the budget.
Okay, and we think that'll be positive because that's the whole point of it, to pool and reduce costs, etc., going forward. Yeah.
That is government's intention. That is their rationale for wanting authorities to pool greater. Of course, so that will depend on ultimately the overall investment strategy and whether there's any tensions between pooling and what an authority was already sort of planning to do in their asset allocation strategy.
Maybe even a cost of change to do that, but potentially as well.
Yes, yeah, absolutely. And that's sort of a fine line really between savings in sort of management costs compared to the transition cost to get there, which will need to be part of any, I think, considerations by government. And also the timescales of moving towards any different pooling position, and whether we want to do that over a longer period of time to try and reduce some of those transition costs.
Yeah, fair enough. Overall report, very good. Thank you, Simone. Thank you for answering the question. Thank you, Chair.
Thank you, Simone. Thank you, members. Are there any questions on the Pension Administration Business Plan, which is your Appendix A? And again, there are none. And that concludes that item. Thank you very, very much, Simone. Right, that is item 9 concluded, and we are now going to page 53 to 66. That's a pension fund improvement report, which will be introduced by our pensions project manager, Stuart Wells. Welcome, Stuart, and over to you. Thank you very much.
Thanks, Mrs. Page. Morning, everyone. So this report is a roundup of progress in respective areas of identified improvements and other projects related to the continuous improvements team. We start, as tends to be the case, with McLeod. So Ian's touched upon some of this, so I'll try not to overlap what's already been said. But just to say that now that we're live with the McLeod legislation, that the number of cases where additional pension has been awarded to members so far as a result of the remedy has been extremely low. During the first month of processing cases, only 5 out of around 180 cases that were processed resulted in an increase in pension, and these were relatively small amounts. Also related to McLeod, we've had to put some transfers in hold where national guidance had to be updated to reflect the McLeod ruling.
This guidance has now come through about a fortnight ago, and we're currently working our way through this, though we're still waiting for systems to be updated in respect of those changes. So those transfers currently are on hold, but we're continuing to try and make sense of the guidance. As Ian mentioned, Altair is generally processing cases correctly, and the particular issue that he mentioned will be fixed, and the latest version will be installed tonight. Regarding communications, we have circulated information to employers and members in respect of the McLeod changes, and there is information available on the website as well. The ongoing exercise to update records with McLeod data continues, and the latest figures regarding progress can be found in the report. Just to add that processing has taken longer, where not all the information is on, but we do have plans in place to take steps where that information isn't updated, but it is just another extra step to extend the length of time that it takes to process a case. Pension dashboards. The pension dashboard programme have informally advised back in November that the staging date for public sector pension schemes, well, specifically the local government scheme, will be September 2025, and this will be subject to formal confirmation in the spring when the final guidance has been produced. So in the meantime, we're continuing to work on data quality to ensure that our data is in good shape as it can be. With regards to the AVC framework that we're working on with some other funds, work continues on this. And in November, interested AVC providers were invited to submit their applications to join the framework, and the deadline for submissions has now passed. And we're in the process of provisionally assessing applications, and a moderation session is scheduled at the end of February, with the launch of this framework still scheduled for late March. Pensioner payroll. Following a period of testing, we've had new functionality installed into the Altair Pensioner Payroll, which has brought two main benefits to administrators. Firstly, an increase in automation following the process of a retirement. Previously, a new record needed to be manually created after the pension benefits were calculated, which increased the risk of error when data was being transferred over from the admin side to payroll, and that required a higher degree of checking. This, though, is still the case for some cases, and we're working with Hayward to try and increase the number of cases that can be automated. The other main benefit of the new functionality is the creation of an arrears calculator, meaning when a pensioner is processed after their retirement date, manual intervention that was previously required to pay any arrears that were due is no longer needed, and this has been fully implemented and working well. Some cases have been spot checked, and there's been no issues identified so far, so that the amount of time spent checking this area has been greatly reduced. And following on from these changes, existing retirements and deaths processes will be reviewed to ensure that the benefits from the new functionality is maximised, along with some recent changes to the Altair workflow system. And we've got a meeting scheduled for payroll that has been delayed by a couple of weeks following the sickness of a key member of staff. But nevertheless, internal discussions regarding improvements have already taken place in pensions, and that meeting with payroll will be rescheduled very soon. Just to touch on the 2025 valuation, and to say that preparations are already underway with regards to our data. Our actuaries, Hyman Robertsons, were requested to provide a mid-valuation funding position to assess progress since the last valuation, and give a guide to the likely outcome in 2025. Their calculations have indicated an improving funding position for the majority of employers, although it's important to note that this is not as thorough as a full valuation exercise, and any update is only a snapshot in time. Within the pension section, we've begun prioritising casework to ensure that data is as accurate as possible when it does get submitted. And the initial focus is on the larger tax-raising employers, and we will be submitting data in respect of those stabilised employers in September 2024, before then moving on to the other employers, and their data will be submitted to the actuaries in 2025. Ian touched upon the general code of practice, so I won't replicate that. Just wanted to mention the access to annual benefit statements. So at the last board meeting, a question was raised regarding whether it was possible to report on the number of scheme members who access their ABSs through member self-service. And that to enable us to do that, we need to link the website to Google Analytics, which does allow for this level of scrutiny. However, it's currently not possible to report on this facility without having a cookie page banner installed. The banner notifies users that cookies are collected and gives them a chance to accept that, reject it, or choose specific cookies to be collected. So cookies are small files that store data relating to the browsing activities of web users. So although at the moment we're not able to do that, we are expecting that the next generation development of member self-service will include cookie banners as standard. And once that version is installed, then we'll be able to report on this facility. I've just added a new section to the report called Wider Topics, just to inform the board of some of the wider issues that are currently related to the LGPS. And the first one is investment changes, which includes changes to pooling, which Simone's already touched upon, so won't dwell on that. But there are other changes on investments, including a requirement to invest up to 5% of assets to support levelling up, also to increase investment into high growth companies via private equity. And there's a proposed approach in the long term to reduce the number of pools to deliver scale of at least 50 billion of assets under management. The Scheme Advisory Board have issued a statement on surpluses. This has been designed to assist administering authorities to manage their surpluses within their own funds in light of the improved funding position that many funds find themselves in. So there are 4 key areas in the statement, but I'll just touch upon a couple that highlight nationally an interest by some employers for strategies that are more suitable for them rather than the fund as a whole. There's an increased interest in tailored employer investment strategies, where some employers wish to influence investment and funding strategies to suit them. The statement notes that additional resource and increased costs would be required to tailor those individual investment strategies. And another area that's on a similar vein is partial terminations. And some employers have suggested exiting a fund for their deferred and pensioner members whilst remaining a participating employer for active members. And this would allow them to lock in costs for their deferred and pensioner members, because we would calculate an exit payment that would be due in respect of those liabilities, which would leave no recourse for the employer in question to pay towards those liabilities in the event of adverse future changes, which potentially could leave other employers to pick up the cost. We'll touch upon this point again in the policy report. It's important just to stress that at this time, no employer in our fund has expressed a formal desire to adopt either of these areas. These aren't areas that we are in favour of, and we were approached only last week by a committee member who expressed his concern over employers adopting these strategies. So with that in mind, we are proposing a slight addition to the fund's policy on employer risk to reflect those views, with the intention to then make changes to our funding strategy statement at valuation time. at which point all the points in the statement will be included in the wider valuation discussion with Heimans Robertson. So we'll come back to that when we look at the policies, if that's okay. Sharia law and the LGPS. The question of whether LGPS investments are Sharia compliant has been raised by members of numerous funds nationally, and the Scheme Advisory Board have sought counsel on this issue, and they were advised that a discrimination claim was possible, or even a broader human rights-based challenge in the civil courts. Counsel has suggested that if it were classified that an alternative pension provision could be offered, this would most likely not be limited to Muslim employees who opt out of the LGPS by reason of their religious beliefs. And as a result of this question, SAB commissioned an Islamic finance expert to produce a report on Sharia law and the LGPS to address any possible legal risks for scheme employers and to ensure that the scheme is inclusive as possible. So SAB confirmed at the National Technical Group back in December that the advice given was that LGPS is compliant with Islamic beliefs because pension contributions are treated as deferred pay. So SAB will now go back to council for a follow-up opinion and consider this advice alongside the report that was produced, which has now been published on their website. So I think that's all I wanted to cover on that. Was there any questions that people wanted to ask on the report?
Yes, there is. Richard, over to you.
Thank you. Could I check my understanding concerning paragraph 47, please?
Yeah.
As I recall, at our last meeting, didn't we express some concern about limitation on our investment decisions by government requirements? I could just let me know whether officers feel any concern about those requirements under paragraph 47. Thank you.
Right. Oh,
Sorry, Stuart, do you want me to? Yeah,
yes, please. Yes, thank you, Kat.
At the moment, so that's come out of the next steps of investment consultation. At the moment, it's not a requirement on the funds, and even if they kind of come into regulation or recommended by government, it's not you have to invest 5% of assets in levelling up. It's you have to explain a plan, and then if you can't do it, explain why. The fund we've taken a report to committee. I think back in December, which maybe we can share the link to members, but we've looked at our exposure to UK investments, and it looks like the fund is probably the fund is overexposed to UK assets more generally, so we'll probably hit that requirement in any case, but any investment decision would be taken in terms of fiduciary duty, but it's clear that this steer is coming from government and across the political spectrum, so it's just something the fund's monitoring, and I think there's a risk in the risk register that kind of takes that on board.
You may just come back with one more question, if I may. I understand the point that larger pools drive investment, but I thought we expressed some concern about being required, we're not required perhaps as yet, to join larger pools. Could you just update me on that, thinking on that, please?
So my understanding is government, I can't remember if it's by 2030 or later, but basically government wants pools of about 200 billion, and that's it must be by 2030 or 2050. So at the moment, LGPS Central is in a good place. So across all of the funds within LGPS Central, we have about 50 billion. So by 2030 or 2050 or wherever, that will be an economy of scale if we continue investing in that. So there's smaller pools across the LGPS which would probably get picked up, but we sent a consultation response to government on the consultation, and we kind of set out the concerns of the fund in terms of that kind of complexity, and as Simone mentioned earlier, that kind of the cost of transitioning versus the cost of savings achieved. But there's not kind of a clear way forward at the moment. So we're still waiting on further guidance and what government mean, because there's points about how we're pooled, and we think we're pooled with these low cost passive funds, and it's just whether they can be included in what we actually can constitute as pooled.
Thank you.
If I recall correctly, we had a report and an item on that, and whilst Kat explains it so eloquently in my simple terms, I think the way I understood it at the time was that we are better off on our own rather than going into a larger pool. But maybe later on Ian can come back on that. I'm sure we had a report on that, setting out the details.
Yes, sorry, I share your recollection. Thank you.
Oh, that's all right. Okay, thank you, Richard. Anything else? Because I'm going over to Ruth now. Ruth.
Thank you, Chair. Morning, Stuart. Thank you for the report. Could I just ask a question around, excuse me, the AVCs?
Yeah.
And the framework. So if after the tenders have been evaluated and a new provider is selected, what does that mean for employees who have a contract with the current provider, Prudential? Do they have to transfer, or would that just continue?
They wouldn't be forced to transfer. We're considering options, but the most likely option is an additional provider,
okay,
rather than a replacement. And then that would allow members to make a decision whether they wish to remain where they are or to transfer over to a new provider. Just to add, at this stage, it's still fairly early on in the framework. We're just finalising the framework, and once that's live, and then we'll join the framework in terms of selecting an AVC provider. So we're still putting that framework together at the moment.
Okay, thank you. And then could I just ask one further question on pensioner payroll, Chair, if that's okay? In terms of the pensioner payroll, does that sit within the administration team, or does that sit separately within the county council sort of payroll team?
The actual, it's still separate. It's still part of the payroll section. Our duties are becoming more involved on the admin side, whereas previously we would run the calculation and then set up the pension and pass that over to payroll. Because of the automation, there's more falling onto our side, but the actual payments, the running of the payroll and the payment of the back system is still dealt with by the payroll section.
Okay, thank you.
Okay.
Thank you, Chair.
Thank you. Now, I don't see any other hands up, but Stuart, you said you will talk in relation to the statement on surpluses in your later on policy, or?
That's right, Chair. Yeah.
Okay, because I have got a big note when I was reading it, risks across that, but you did allude to it, so I'm sure you picked that up later. Thank you for that. And that concludes report number 10. Thank you, Stuart. Much appreciated. And we are now going to pages 67 to 86 of your papers. And that is the item 11, pension fund training needs self-assessment. And that again is Kat, who is taking and introducing that report. Thank you, Kat, and over to you.
Thanks, Chair. So I'll only briefly go over this because it's more about asking the board for your opinions and your views of part of, I guess, past training, and also kind of how we deal with it in future. But the kind of background to this is the local pension board, unlike the committee, does have legislation that sets out you have a personal responsibility to have an appropriate level of knowledge and understanding for the purpose of serving on the board. As part of the next steps on investment consultation, which obviously covered pooling and levelling up, it also included a comment about requiring pension committees to have policies on training, and whether that's being undertaken in line with the training policy. So Leicestershire has historically had a training policy which is applied to officers, the board and committee in any case. So we're obviously kind of following best practice as part of this. Every year we ask members to complete a training needs assessment. So this was 39 questions, and we had 8 out of 13 committee members and 3 out of the board members that have completed that so far. So we're kind of just urging any board members that haven't yet completed the form online to kind of undertake that as quickly as possible, because then we can feed that into how we programme training for the year ahead. So it kind of sets out a high kind of brief overview of the training policy and how you undertake training. So obviously it's part of these meetings, within committee agendas, after meetings through Hyman's, and then also kind of face-to-face sessions which we've hosted jointly with the board and committee. Attached as an appendix to this report is completion of training so far since March last year. We take a snapshot at the 31st of March that gets included in the fund's annual report to report it against best practice and good governance. So we're in the process of reviewing the fund's training policy to see how we can be more effective on reporting on progress and also helping members in their kind of requirements and what will help you most. We're very aware that you're not expected to be experts, and we don't want to set unreasonable standards which create difficulties for you serving on the board and of course the committee as well. There'll be varying levels of knowledge depending on how long you've sat on the board, and we know that many of you will have kind of built up good knowledge and experience over these years, but we need to evidence how members possess the expertise, experience and knowledge required to be capable of serving on the board and committee. So the Hyman's modules were refreshed in September last year. So I know members were accessing it before then, but now it's been refreshed. So kind of completion was reset to 0, and they refreshed and reviewed it and hopefully kind of took on board some of the board's comments previously on kind of difficulties around accessing it. So it should be a far more streamlined approach. The fund looked at a number of different fund training policies. So some of them require members complete all the Hyman's training, and some of them have a bit more of a varied approach in terms of, so over like a 3-year period, you'll have different recommendations for each year of serving on the board or committee. I know members have a trial after this meeting to kind of undertake the administration module, which Ian mentioned earlier. So obviously we'll have feedback from after that session, and also hopefully feedback as part of this agenda item, and then we'll put that within the training policy review, which will ultimately come back to board and then again to committee, but I'll leave it there.
Thank you very much, Kat. Before I go over to members, indulge me a few comments. Whilst I appreciate that knowledge for everything you do is required, and it is probably also good to evidence it, but I believed, having been on this board for some time, the way we carried out our training was very effective and very efficient. Now, after every meeting, we had a training session, which was delivered by Ian, and it always made training, explaining the terms, very simple, very user-friendly. And for instance, with the turnover of new members coming onto this board, say today we've got Ellie, and for her it must be daunting looking at all of this, but as the training program was always very simple, tailor-made at the end, and everything was explained, in my opinion, being a total novice to this, it was always very user-friendly. Then Hyman's modules appeared, and they made this a very time-consuming, onerous task, which it's evidence that members have tried and many members have not succeeded. And I'm one of them because I'm sitting here as a volunteer. Elected members, it is not within their remit sitting on this because they will not receive pensions, because maybe some older ones, or like Mr. Shepherd, he receives a pension because he was a teacher. But going forward, elected members are not pension fund of pension receivers. So this is a voluntary position. And when they're going and are asked to be part of a very stringent Hyman's module that was very difficult to do and was very time consuming, it is a very, very big ask. So I am looking forward to today to see how we can do this collectively and continue doing this collectively, rather than expecting members to go away and say, right, you need to complete these modules. So my number one ask, it is to continue to do these modules we are required to do them collectively, and maybe to set a training a morning or something within our agenda, so we all can come together, and it is up to other members to agree or disagree with me after I finished. But it would be nice to do, say, a morning to do a couple of Hyman's modules collectively and work through it. Now, the training Ian provided after each meeting was, to me, and I'm sure will be for all new members, extremely valuable, because it dealt with all of the things we needed to know. And it was in simple terms rather than a Hyman's module. I've tried it, and if I compare a Hyman's module to Ian's, well, I have Ian's training any day because it resonated, while Hyman's was over the top and it was very much being talked at, and, you know, well, I didn't find it as useful. So that is my quest to somehow continue with Ian's training the way we've done it, and possibly either merge the modules or set an additional training session aside. Now, my next point, and bear with me, members, my next point, it is, I think, that we need to have a simplified training schedule, what we need to do, and over a time span. Now, today, this is our kind of AGM, where we're having a new chairman and we're starting a new cycle. So then over that year, and maybe over the next 4 years, and I know this is not dependent on the council cycle, but we should maybe do a several-year training schedule that we can identify and go through. To compromise all of the things we've got to do, and that is very much in your remit. I don't understand it, what we've got to do annually or over 2 years, but it isn't becoming clear, because I have got a very comprehensive report in front of me, but I can't quite see what I've got to do within the year and, you know, over a whole period of time. Do you follow what I'm trying to say? I'm not clear what I'm doing here. I also, and this is my last point, because Simone wants to come in, I also am a little bit concerned in relation, and I have mentioned it, of this year starting in February. So council years start in May. We are looking forward, or not looking forward, to council election next year, May. So the councillors on this will be effective, and none of them might be on this committee. So somehow we need to reflect in our standing orders to either start our year from May to May, or make arrangement, and just talking hypothetical. So if I'm not elected next year, that Manjit will automatically take over as chair. You know, but then what you do in, you know, so we need to address that, and we need to think the logistics out on this for this.
Oh, sorry, you've just gone on mute, Mrs. Page.
Oh, sorry, I stopped there and I take comments, and the first one is Simone. Over to Simone. And
thank you, Chair. It was just to give you some reassurance, really, that, you know, clearly we, you know, as officers, we need to make sure members of the board and the committee actually are equipped with the right skills and knowledge to deliver your function on these committees, and also to keep that up to date as well, because pension regulations and legislation can change, as you've heard probably throughout this morning so far. But we also need to make sure that how we deliver that training does work for you as well, especially with the, you know, limited time that many of you have got, I'm sure. So we've got the session after this meeting where we are going to do that sort of hybrid approach. So we'll, you know, interested in your views as to how that works for you afterwards. And then we are going to be putting together a plan that probably will combine different types of training, so we can see what will work best for you and get feedback on those different types of training. And I think it's important that we do try and make the best use of the different training tools that we've got. So, you know, Ian and the team can absolutely deliver some training, but the Hyman's tool, it is really valuable as well. So it's how we can weave that into that training plan so that we can make use of that, but in a way that is helpful for you, because we want to make sure that you get out of the training what you need, and that it makes the best use of your time as well. So perhaps we'll see how the session goes this afternoon. Then we are planning to put something together that sets out what that training plan is, and we can share that with you for your views before we finalise it.
Yes, thank you, okay. Simone. But this was, we have all tried it. We have made our comments, and this is how we arrived here in the first place, where as members, we collectively looked at the modules where we found faults. Ian then went back and talked to Hymans. They adjusted the models already. And that is how we suggested that we do it together. And as I just said, this is, I think it is a way forward. Let's see how it goes. But I think we need to do it collectively rather than individually in order to get the best out of it. Can I just go to Ellie and then to Richard? Ellie.
Thank you. Obviously, I'm completely new today, so I'm picking things up as I go along. But I just couldn't agree more with your comments, Chair. Doing it collectively is much better. But for me also, and I'm sure it's the case for many people on this call, you have such chaotic diaries that actually asking me to go away and complete a module, I'll probably never get to it. But actually, I'm very happy to sit down in a programme session, whenever they're available to do the training. It's much more effective. Well, it works for me, but much better that way. Thank you.
Thank you for those comments, Ellie. And we all found that previously. How it used to work was that after every session, like every meeting, as we had today, Ian would talk us through some training and whatever, and it always worked well, as I said, until the Hymans modules came along, and we just found that as individual members we never got around to it. Or for instance, I did mine, invested an afternoon of time, and then I forgot to click it and it never registered. So yes, we hear you. Over to you, Richard.
Thank you. Yes, well, I mean, haven't we discussed before our experience at the Hymans modules as they were, and Ian and others know that, and back to Hymans. Like you, I look forward to this collective training we're going to be having, particularly the chance for interaction, which I think would be helpful. So I look forward to that. And yes, I agree with your comment about how a number of us found the Hymans in their original presentation a little bit dry. Experts quite clearly, but okay.
More than dry, but we did work all together on the way forward. And yes, now have I got any? Oh, Manjit, yes, over to you, Manjit.
Right, thanks, Chair. Just to sort of echo what Councillor Shepherd and Councillor Page have said, I mean, Ian's fantastic as a presenter, and he's got wide area of knowledge. Obviously, they'll be putting a lot of pressure on him to carry out the training, but that's something for yourself to understand and maybe get other resources on board. But they were very useful, the combined sessions, learning from each other, learning from questions that other people ask, and then responses as well. Another point I think I'd make is that recently I've just tried the modules again from Hymans in the last sort of few days. And I have got some further feedback as well. So that's to help to improve, make them even better, I guess. That's really what I'm talking about. So maybe I can give that feedback directly to Kat or somebody else who was sort of leading on that side of things, because I think there's still some improvement you can make on those. I agree with Councillor Shepherd that they're a bit dry. And also I found that when I wanted to go back and repeat something, I'd have to go right back to the start rather than going through sort of halfway through it to say that's a bit I need to pick up again and again. So that's sort of just a bit of teaser feedback in terms of what I could sort of give you further information on as well. Okay, thank you.
Thank you very much for that. Yeah, let's see how this afternoon training goes. But could I repeat my ask one more time and see whether you agree or disagree that we maybe feature into our work program a half a morning, a few hours here or there to do some modules collectively? So when Kat is doing a training program, that we can feature, work around it. So Ian is coming in. Ian, over to you.
I'd certainly be happy to try and accommodate that. Shall we see how this afternoon goes first, and then from that we can then determine the next stages. But if that works well this afternoon, I'd be willing to sort of do a morning or an afternoon with all the board and committee members, and we can go through maybe one or two, maybe a couple, maybe an investment one and an admin one. So, split them up a little bit. But yeah, I'd be happy to try that route as well if that was to benefit you all.
Can I come back, Ian? But in regards of the training you delivered, our old ways, so to speak, are you proposing to carry on in that form? Because it was very, very valuable to us as members, because not only were you very good at it, but it was a simple form to comprehend a very difficult subject for layperson. And, the introduction and the explaining of terms. And I'm looking like Ellie, she's coming in here a cold. And the way we used to do, or you used to do your training and take all the members on board, it was very, very valuable. So how are you anticipating this going forward? Are we keeping this format and adding the modules to it, or how do you see it going forward?
I think we've got to use the Hymans online training as the master, because that's what we've paid and invested in. We've gone back. Hymans have made the changes that I proposed from comments from the board and committee. We have spent money on that, and that is the governance side of it in terms of being able to prove it's been done. But I'm also happy to try and support in other ways, because I do appreciate people learn in different ways, and I take on board the collective view. I do hear that strongly, and other members have said that to me before. So maybe it's a bit of a hybrid, Councillor Page, whereby we go through the modules from the governance angle, so you hear it collectively from the legislative side, but I try and make it a little bit more human, if I'm honest, in terms of how that translates to our fund. Maybe that's where I can bring a more personal touch to it. So I'm happy to try and accommodate a bit of both, really, but using the Hymans as the key, but from the governance side, because I don't think we should lose sight of the importance of that. How does that sound to the board?
That sounds good.
Yeah, that sounds fine to me.
Fantastic,
And
yeah.
we'll, manage it, and it seems to be no dissent on that. And then we can work something up in simple terms afterwards and put like a simple schedule together how we're going to do that. Because after all, as I said in my preamble here, what we do not want to do is put people off sitting on this committee. Because,
I completely appreciate that,
yeah, because
totally,
going forward, as I said, elected members won't be subject to a pension fund. This would be a voluntary role, and we do not want to, that people don't want to come and sit on. So
and
anyway.
I certainly wouldn't want that to happen either. I mean, we value the board, all of your comments genuinely, and I wouldn't want to invest our time and you invest your time for that to be lost during this. So yeah, I totally understand that, Councillor Page, and I accept that point.
So, well, if there are no other comments, hang on, I just have to look at my notes. The recommendation is on page 72, as I see it, and it is that all members should complete the training needs, if not yet completed, by the 14th of February. How are we going to do that? Because that is only a week. Kat, suggestions on that?
Yeah, so there's a form that was circulated before Christmas, and it's 39 questions. It takes about 5 minutes to complete online. 3 members of the board have already done it. So it's just trying to get a biggest section of the board as possible, because that will feed into the point you're making, Chair, about kind of that plan of where training needs are, because then we can really target it effectively. But I'll get Angie to circulate the link. I don't, off the top of my head, I can't remember who has completed it.
Can we also make sure, I think I've done it, but can we just make sure that we mention it to the people who haven't done it? Because I'm sure they've probably just lost it. Okay, so then members should commit to processing the Hymans Aspire modules, noting that record will be taken as of 31st of March. I assume that point is the point, once we complete this module this afternoon, we comply with that, yes?
So there's multiple modules, but obviously the board have discussed, and we'll see how the trial goes after this meeting, but really it's just kind of that reminder. A snapshot will be taken at 31st of March. If members want their training to be as up to date as possible, then just kind of complete it before then, but we'll sort the training plan, and then obviously that will take into effect for future years.
Okay, so if there's anything else that needs to be done before the 31st of March, we feature something into our plan after today. Okay, now Ellie's hand was up and then Anthony's. Ellie, did you want to make a further comment?
No, it's absolutely fine. I just wanted the recirculation of the form, which you've said will happen. So thank you.
Thank you. We'll make sure. And Ali, remember, you can always pick up the phone to Angie. She will be there to help and guide. Anthony.
Oh, I just wanted to just inquire, if I've missed it, apologies, whether I received a copy of the training needs assessment form might be a question for Angie.
They were circulated to all members of the board and committee, yes.
What date was it, Angie? I'll have to track it
Without
down.
looking at my emails, I can't tell you, but I have sent it out on several occasions.
Okay, what we'll do, Anthony, because Ellie is new, Andrew, yourselves, we'll get Angie to circulate it all again and, you know, remind us all. Is that okay with you, Angie?
Perfect, I can do that after this meeting.
Thank you, everybody. So that then completes item number 11. And we are now swiftly moving on to Stuart Wells again on the Pension Fund Policy Report, which is on pages 87 to 152 on your agenda. Thank you very much, and over to you, Stuart.
Thanks, Chair. So this is a now annual report that has been presented to the board, which rounds up the fund's current strategies and policies, highlighting any changes plus new policies that may have been introduced. The new and amended policies will then be presented to the committee for approval at a subsequent meeting, as they are the body responsible for the governance of the fund. As you will see, most of the policies haven't changed since last time, and where they have changed, those changes are minor. So I'll just quickly run through those. The changes in the overpayments of pension policy were brought to the board in August and are simply included here as part of the roundup. The administration and communication strategy has been updated to include an additional circumstance where the fund may charge an employer to reflect an overall increase in the amount of detail that auditors are requesting from funds in respect of pensions-related information. We've also added a comment regarding how the fund will consult and engage with stakeholders on some strategies as appropriate, as was the case with the admin and comms, and also when the engagement exercise was conducted when the net zero climate strategy was introduced in 22-23. A very minor tweaking was made to the fund's discretion policy, and the cyber policy has been tidied up to remove the dates when cyber accreditations expire and replaced with more general wording, which confirms that these accreditations are reviewed annually and kept up to date. Also on cyber, further details in respect of a couple of minor ICT products that the section has used are included, but the main change is to expand the review period of the policy document from 1 year to 2 in line with most other policies. Though if any significant changes in respect of cyber emerges, then the document would be updated at that time. And the change policies are in the appendices, and the changes are highlighted in yellow. And just to come back to the SAB statement on surpluses that I mentioned in the earlier report, and in light of the concern expressed by a committee member only last week around partial terminations, we wanted to add maybe a couple of lines into our fund policy on employer risk that would convey our views that partial terminations are not something that we are in favour of before we bring our policies to the pension committee for approval next month. So this would allow us then to follow up with more detailed changes to the funding strategy statement prior to the 2025 valuation. So I think it was just really trying to get a view on whether that would be acceptable. It is an area that is new and has been introduced fairly late on, so we haven't introduced it here as we would have liked to. But yeah, it would just be good to get a view whether that would be acceptable to the board. And that's really it. So any questions, happy to take those.
Yes, I have. In relation to the previous report, when you were talking about investing the surplus, of the funding, point 50, and particularly of employees wishing to invest in funds of their own choosing. To me, all of these items seem to be very, well, potentially very risky. Now, could you just talk us through it a bit more? And you did allude to that you will put a risk management to those suggestions. Just talk me through that, please.
Yes, certainly. It's generally seen as a way of funds trying to take advantage of the strong funding position that they're currently in, and really sort of locking in the rates that they're looking at paying at the moment. We have concerns over it. We think once we start going down the route of individual strategies, the admin side is going to increase quite significantly, but we'd also be extremely concerned that any impact that it would have on other employers. So certainly, yeah, it's not something that we would be in favour of. And just to stress, at this stage, we haven't been formally approached by any employers in this fund with regards to these individually tailored approaches.
The points which were listed under that section, I found were all resource intensive to us and extremely risky. And I assume that it will be reflected in comments attached to it and, highlighted and raised, that we would be, that this committee echoes, your point of views on that, so that this was not something we would be advocating.
Yes, agreed.
Okay. Okay. Now just for members' information, your comments and views on this report will be recorded, and then it goes to the pension committee on the 8th of March. So over to Anthony. Anthony, is that a legacy hand, or no, he's coming in?
No, it was a legacy hand. My apologies. Sorry.
Okay. Are there any comments? Ruth, over to you, Ruth.
No, I've not got my hand raised.
Oh, well, it was just okay. My system's gone peculiar again. Are there any other comments? And I see no other hands, Stuart. And I think you've done a marvellous job again. Had I just, before we complete the item, ask, because there is an attachment, which is a joint administration community strategy. Are there any comments on that? No hands coming up, Stuart. Is there anything you want to say on that?
Which item was that? Sorry, the joint.
Oh, that is page 93. That is your on your attached to the report.
Oh, the admin and comms.
Yes. Yes.
Yeah. No, that was just the very minor changes that we made that I mentioned. So that did go out for consultation to all employers for 6 weeks prior to introducing this, and nothing was received back. So I assume that they must be happy with it.
Oh, everything is truly wonderful then. Okay, thank you very much, Stuart. Thank you. That completes this.
You're on mute, Chair. Still on mute, Chair.
I don't know what's going on. That's better. Thank you. And now item 13 on your agenda, pages 153 to 164. And that is, again, Ian on risk management and on internal controls. Thank you, Ian.
Thank you, Chair. This is the Funds Risk Register. This is a report that we bring to each board and each committee. So for the benefit of the newer members, this is a standard report, and the risk register includes all the pension risks. So it's not just the administration, this is the investments, the admin, and then we break them down by category into investments, liabilities, employer, governance, operational and regulatory. We only highlight any changes between each meeting. So whilst we review it, we don't report on every single element. We only report on the changes. So any revisions that have occurred since the last meeting are in the report. So there is a new risk which has been added, and this is to do with the proposed changes to the LGPS regulations and guidance, requiring changes to the fund investment, pooling and governance process. This is what we've touched on earlier in the meeting. Kat touched on this, Stuart touched on this as well. So what this is, it's a new risk following the government's autumn statement regarding the consultation on next steps of investments. This follows the discussion that was had by the Pensions Committee at their last meeting on the fund's submitted response to the consultation in October and concerns related to the centrally proposed changes that may require funds to make changes to its investments, pooling and governance. So we thought by the fact that this is potential changes, proposed changes to the regs, it was worth actually having this as an individual risk on the risk register. Hence, that's been added as a new risk. There have also been a couple of minor changes to current risks. So risk 11, which is the investment decisions being made without sufficient expertise to properly assess the risks and potential returns. This links into what we've also talked about, the training and ensuring that both board and committee members do have the opportunity to have sufficient training necessary in order to help them with decisions that need to be made. So hence we thought it was worth incorporating that into risk 11. And risk 16 is an existing risk as well. That's the failure to identify the death of a pensioner, which can cause an overpayment or potential fraud or other financial irregularity. For the benefit of newer members to the board, there are a number of controls around when a pensioner passes away to avoid the overpayment taking place. We have this audited every year, and we've added an additional control regarding a review of the fund's current tracing service. We've used the current tracing service for a number of years, but there are changes to other providers in this market. So we're going to look at sort of an informal review of that in the first instance. These changes have been brought in to improve customer experience and improve the efficiency. So we're interested in delving into that a little further. Whilst I say that the current process works well, and it's not an absolute pressing need to move to a new solution, but because there are developments in this area nationally, we wish to investigate those further. So we've added that in, but that doesn't, I wouldn't say that trumps things like McLeod or dashboards or the ABCs. This is just an additional element that we do want to consider when we have the opportunity to, in terms of time and resource. That's all I was going to say in terms of the report. The risk register is attached and the information I've discussed is included within it, but obviously happy to take any questions, Chair.
Thank you very much, Ian. And it is noted that on your risk register, 150 page 157 onwards, there are no reds at all. So that is pretty good going. Quick question, risk 11. Investment decisions are being made without sufficient expertise to properly assess the risks and potential returns. Now, that is far more geared to the pensions committee, isn't it? Rather than us as the board, because you know, our remit, it is totally different than the committee, because we really do not make any investment decisions. So should that be maybe reflected in the wording a little bit more, because there is a huge responsibility on the committee rather than on the board? Just seeking a thought here.
Yeah, that's a fair comment, Chair. To be honest, I wouldn't disagree. I think the fact it's just talks about members and officers to complete the modules. It's not made it specific on that particular risk. It's more generic. But on that particular point 11, I do accept your point. It is more specifically targeted at the committee members. Yeah, I'll take that point, Chair. Thank you.
Okay, members, are there any questions, concerns, anything other than noting this report? And there are no hands up, except for Anthony's legacy hand. So thank you very much, everybody. I see the training modules have already started. Hang on, let me just click that away. Right, so that is the risk management internal report noted. And that brings us to item 14 on the agenda. And the item 14 deals with the date of our next meeting, which is, of course, the 17th of April, 10 a.m. And again on Teams, looking forward to seeing you all there. There are no other items, as earlier discussed, on this agenda. And I thank all of the officers, I thank all of the members attending, and we will close this meeting now and convene into the Hyman's training modules. So thank you very much, and closing this meeting at 11:53. See you on the next module. Thank you.
Thank you, Chair.
Thank you.
Thank you.